Starbucks reported results today which were in line with expectations on pretty much every metric. One thing they did give was updated guidance for the fourth quarter, and there's sort of an interesting nuance here. So the only thing that they actually changed from last quarter's update was that the China-Asia-Pacific region is expected to have a margin slightly above 20%, where they guided to approaching 20%. And the interesting thing, if you compare the results relative to what the street was expecting, you can see that for the current quarter, fiscal third quarter, all of the earnings metrics were pretty much in line. EPS beat by about a penny, depending which analysts you include in your consensus estimate. But if you look at the top line and bottom line guidance for the fiscal fourth quarter, they beat on the revenue line, and they came in line with estimates on the EPS line, which is kind of odd because they didn't change their full year target for revenue, but they did just tweak their margin guidance. So you would think it would be going the opposite direction. Either way, results were largely in line with expectations. Shares still moved over 4% in after hours. So we're going to plug in the new results to our earnings model to see if that change makes sense. So just quickly, if you're new to the model, our Starbucks model is pretty easy to follow. It's a bit more basic compared to some of the other models. We still have the non-GAAP and GAAP income statement at the top, and then at the bottom we have the segment details. And we apply a price-earnings ratio to the next 12-month EPS estimate to come up with our valuation. So if you expand the segment details, you can see we have the Americas, Europe, China, channel development, and all others. And our approach to generating the income that shows up here is to break it down into revenue per store and operating margin, which is what the company gives guidance to. So you can see any place, and you look at this color legend up here tells you any place that you see the blue cells, they represent our Gutenberg estimates. Purple cells represent the company guidance, and orange cells represent consensus estimates. So the file that we're looking in now is the latest updates that includes today's release, so the consensus estimates are no longer relevant. But in the old files you'd see a number of orange cells like this. This is the old version from prior to the release, and you can see that we had it calibrated to the consensus estimates prior to updating it. So here you can see prior to the update the share price valuation was $56.50, and that's based on this calibration. And now, after updating it to include today's release, it's $57, so slightly higher than what it was before, and that's keeping most of the growth rates constant with what we had to calibrate to the consensus estimates. So overall, not a huge change, and given that shares are trading near the recent highs, most of the upside might be priced in at this point, and they'll have to come up with some serious growth next quarter or some really good guidance for the next fiscal year in order to move shares. If you'd like to download this model, it's available at our website, www.gutenbergequityresearch.com. From the home page, you can just click on the Models store or click on the Models in Focus, where you'll find Starbucks. And this, if you click the button, it'll reroute you to PayPal, and you can download for just $5. And be sure to check back after the analyst estimates are updated. We'll recalibrate the model and get it ready for next quarter. Thanks for watching.